What's up, everybody? Welcome back to Cilinix Crypto. Good morning and welcome to your daily Bitcoin update or a Bitcoin update this morning. If you're new to this channel, welcome. But what we'll do is we'll talk about Bitcoin. We'll talk about the price mainly. But in this video, we'll also talk about some fundamentals, because tomorrow we have quite some important fundamentals. To be honest, very important fundamentals. We have the United States interest rate. Now, I will talk about that tomorrow as well. Obviously, then we know a little bit more in terms of where we stand in price. Obviously, that could still differ a whole lot in the upcoming day and a half, because it's in the evening, as you can see. At least for me, in the US, it's in the afternoon, but that doesn't change the time that it is from this moment. So yeah, wanted to talk about that a little bit too. For now, though, as you can see, this was my analysis for the last couple of days. It happened. We found some support at 20,500 first. We expected, that's also what I said yesterday, to drop down a little bit lower to at least like 20,200. In the end, as you can see, found support at that 50 EMA, very strong EMA. That red line, it's like the 50 period EMA. Has been very strong for crypto in the last few months. Not that much right here because we were in consolidation. EMAs don't work that much in a consolidation, but it's also a confirmation that the market structure has changed. Because when you start to respect those EMAs again, they're very trending indicators, right? So they only work when they trend. So it really does seem like we went from a consolidation into, well, I would say somewhat more of a trending market, but also somewhat more of a bullish market. So what I expect now is right now we're struggling with getting within this level between 20,500 and 21,000 again. I'm just going to delete that, but I do think we'll be able to do that. Then our major resistance level obviously still is 21,000. Now, whether we can break that or not is a little bit more difficult. I don't think we will be able to do that without the fundamentals tomorrow or before those fundamentals. So there the fundamentals come into play. It's the interest rate. Interest rate going up is bad for crypto, all right? But this is already expected. And it has already been pretty much confirmed that it goes up to 4%, so not too much surprises from this. We might see some more volatility, but I'm not expecting big moves. I am expecting bigger moves, though, from the Federal Reserve press conference. All right, and basically what they'll be in that press conference is they're either going to say that they will keep increasing the interest rates by like 75 base points, or they will say that they're cooling it down. Cooling it down would be massively bullish, after which we would probably shoot up above 21,000 and get up to like 22,000 at the very least. If they're talking about that, they're going to like increase it even more towards like 1% increases. Well, unfortunately, then I think we're going to drop down. And I don't think we'll recover very easily. Because that would be very bearish, of course. And obviously, the main thing you need to do in these scenarios is to do some sort of a sentiment analysis, right? So what is the market expecting? I think the market is expecting a 0.75% increase. So that will be flat, I think. And I think the market is kind of expecting that they're going to cool it down for some reason, because we've had increases up until 4% then tomorrow, which is quite high, especially compared to the last 10 years. At some point, it's going to have to cool down a little bit, right? So a lot of people are expecting that. So if that doesn't happen, we will fall pretty hard. If it does happen, I still think, even though people are kind of expecting or hoping it, I still think we are going to go up. So that's my take on Bitcoin this morning and a little bit of a preparation for tomorrow. But tomorrow I'll be back as well. So for now, take care. Have a great day and bye.